Welcome everyone to Maverick Currencies. I'm Corey Halliday, and tonight we're going to be trading the RBA rate statement. As usual, we'll be looking for trade ideas that fit certain parameters, definitely the chart setup that we can wrap good risk reward probability around. So without any further ado, let's jump right in and let's trade the RBA together. So the expectations are for a 25 basis point rate hike. You can see expectations, we go from 3.1 to 3.35. A 25 basis point rate hike is on par with what the Fed just did, but they're at a lower overall rate. If you jump down here, let me hit calendar. If we hit the calendar button and we come down here, we can compare central bank rates. You can see that the U.S. has moved fastest and furthest in terms of central banks at 4.75% currently. Everybody's dealing with inflation and trying to get that back under control. We saw some recent numbers out of Australia showing higher than expected CPI, and the takeaway there, I often talk about that in the markets there are known unknowns and there are unknown unknowns, right? And these are two very different things. So what's a known unknown? What's an unknown unknown? Well, a known unknown is like the RBA statement tonight. We know that they're going to come out with the statement in about 15 minutes roughly. So it's a known unknown. We know it's coming. We know there's likely to be a 25 basis point hike. We know all of these things. We just don't know exactly how it's going to go, right? The number could come in as expected, but they could put a little statement out that makes you think that they're going to raise more or less or whatever. So there are some unknowns, but there's a lot that's known here. And so what that creates is an effect that a lot of times it's already priced in, right? My takeaway would be that basically because we saw higher than expected inflation recently, the market already started to price in rate hikes and future, they've already adjusted. So it's already been largely priced in, would be my takeaway. That's kind of the thesis that I'm coming into this event with. Whereas if it were an unknown unknown, that's something that truly comes out of nowhere. And then you have all the question marks of, well, what are the ramifications of this? And what does that mean? And so on. In fact, we just had an unknown unknown. There was news that Turkey, Syria, that area had a devastating earthquake. That's an example of an unknown unknown because it came out of nowhere. And then the questions are, well, how does this impact this country, that country? This can create more volatility. This, a lot of times, is priced in. This cannot be priced in. It just is not possible because it literally came out of nowhere, was not on any calendar, was not scheduled. That doesn't mean it has to be hugely impactful. Like, you're not seeing the market go crazy on this news that there was an earthquake in Turkey. Yeah, it's a devastating situation to those people involved, no doubt. And of course, we wish the best for them, but we also have to kind of look at the markets because that's where we deal. That's our work, right? And we say, okay, well, how does this impact different countries, economic conditions, and so on? And the reason that the stock market and other things are not reacting is because it's not a factor for moving stocks right now or moving the US dollar or the Australian dollar or whatever. There's not as much of an impact, basically. So priced in versus not priced in. My argument is, again, I'm coming into this with a bit of a thesis that the Australian dollar has somewhat priced this in. That would be the expectation. Now, let's come over to a chart or two and just talk about how that might be the case. So I'm going to come in. Let's come over to let's go to Aussie US dollar. Okay. Now Aussie US dollar has already been selling off for a couple of days. This is a daily chart. Sold off hard the past couple of days. Looks like it might bounce, and frankly, I would look on this bounce to probably get short. I mean, that's my instinct here, is that we kind of fade any upward reaction in the Aussie. That would be a short Aussie US dollar trade. On the daily chart, kind of looks more bullish than bearish, to be honest. Okay, that's fine. On the 4 hour, it's in more of a downtrend, and on the 1 hour, it's more of a downtrend. Now, here's my thesis. Here's my system, my approach, and so forth. I want the next longer time frame to agree with my trade. So I look at the daily chart and it's bullish to me. This is a more bullish setup, okay? So I can't short it on like a 12-hour chart because I want the next longer time frame to agree. But if I look at the 4 hour, it's bearish. So I can, this is the next longer time frame to the 1 hour chart. As long as this one's bearish, the next time period underneath that I trade would be a 1 hour. And it's bearish and almost hitting our bearish Bollinger Band technique system setup. So as long as, it doesn't matter that the daily chart is bullish, unless I'm trading the 12 hour, then I can't short it. I can trade this hourly chart bearish because the 4 hour is also bearish. That's kind of my systematic approach. I need whatever time frame I'm trading, the next longer time frame than that to also be bearish. So the 1 hour chart works for me because the 4 hour chart is also bearish. Hope that makes sense. Now, what I'm looking at here, we've almost touched the upper band, but not yet. We're below the 50 period moving average on the hourly chart. The trigger will be a move up here to touch the upper band. That is what we're looking for here. Now, I always want to have a trade set up. So let me just snap something. Now, I'm not going to trade on this. This is just something I use for education, and then I'm going to trade on another screen here, but let me show you kind of a basic approach here. Let's put a target. We'll just snap something initially. Let's put a stop loss a little bit above. We'll just get something in place and then we'll move them around. So here would be a stop loss, and here down below would be a target. And frankly, I'm targeting a move down towards the prior low and this lower Bollinger Band, and a stop loss probably go right up there above the 50 MA. We could even potentially get a little tighter, but risking, again, this needs to trade up to trigger our short, because I need it to touch that upper band to be a bearish trade. So I'm really looking to short it a little higher than it is. It's trading, you know, it needs to trade above 0.6925. It needs to trade up a little bit here. So we're probably risking at most, if we put that at 51 on the stop and we get triggered above 25, we're risking about 25, 26 pips or so, and see it spiking. Okay, so I'm going to watch the energy, see if there's any fade. I wouldn't transmit yet. If it just keeps exploding, we won't transmit, but watch for a little fade here. Because it's up so much, I'm going to shift everything upward. I'm going to shift this up, and I'm going to shift my stop loss down just a touch. We'll risk less to make more. And I got to tell you, we may not act on this. If it, okay, I'm going to trigger, I think we're good enough. I'm going to trigger the short here at 69.43. It should have executed at 69.43 with a stop at 69.62. So now we've got our trade. 69.62, sorry, I'm trading on another screen here, is the stop out point. And it might hit that quickly. I wanted to see if it would start to fade, and it did. So we're in at 69.43, or you probably could have got short just a little bit above that, but either way. And then the stop, 69, you're risking 20-ish pips. That's 19 pips, but let's just call it roughly 20 pips. Reward is still the same. Reward target down here is still the same. So, there's no cause for celebration yet. We're only up 2 pips in the trade. We're only profitable by 2 or 3 pips. Now we're back to break even, right? We might stop out here quickly. That's a very real possibility. But if it does start to work its way lower, your take profit down here at 68.56, if we think about that, I mean, if it could get down there, and I probably wouldn't, I'll tell you, I probably wouldn't hold the entire position to 68.56. I'd probably hold about half of it. So as we fall, I'd probably take profits. We get back to 69-ish, take 43 pips of profit. But that move down right there, it's about 87 pips, if I'm doing that math correctly in my head. So about 87 pips to the target and 19, 20-ish pips of risk. And I think we've got a pretty good setup here. Pretty good idea, pretty good game plan. Again, the thesis is that this is already largely priced in, and the expectation is that we're going to have a deterioration back towards the lower end of the range, that this bearish Bollinger Band setup should trigger, and then we should trade back towards the lower end of that range. And again, we're up 5 or 6 pips so far in the trade, but that's certainly nothing to get too excited about. There is certainly a temptation to drag a stop loss down if you so desired. So let's throw some things back in here. Let's say that you got short here and your stop loss is up above here. Let me fix this. 69, 62, or what have you. If your stop's up there, you don't have to leave it there. We could tighten up that stop. Like, for example, it already set its high at 69.52 on the announcement. I mean, theoretically, you could pull it down over the top of that and be risking more in the neighborhood of about 10 pips or so. You're already profitable by around 10-ish. You could, tighten up that risk, because here's basically the point of why we might tighten up the stop. If this thing accelerates again and breaks above that, it's probably going up to the higher stop loss as well. So if you wanted to drag it down a little bit, I've got no problem with that in terms of risk management and such. Again, I think this should be the right general idea. Now, let's come back, and we might have to do a little bit of searching here, but if we go back to some prior data, I was going to look for, here it is. So here is the CPI data for Australia that came out on January 24th. So that was, what was that, 2 weeks ago? But here again was the takeaway. See this and see that. The quarter over quarter number came in 0.3% above expectations. That's a pretty big jump. And the annual number came in almost 1% higher than anticipated, 0.8% higher. So higher by 0.3 and higher by 0.8 on the yearly. This is why for the last 2 weeks, it's had a chance and an opportunity to basically get priced in to a large extent. Again, it doesn't guarantee success, but this is how I like to operate and has really always worked for me. Let's go back to the daily chart and assess. If we come back here and you look at that period of time, notice that when that came out, January 23rd and so on, we largely went higher for the immediate 7, 8 trading sessions. We're higher in price. And it's not just Aussie USD. Aussie Kiwi went higher. Aussie CAD went higher. Now it's fallen back a little bit recently, EUR.AUD, see how euros drifted lower versus, whoops, EUR.AUD. Well, that one hasn't. That one's actually strengthened versus the Aussie. Australian dollar versus yen is more sideways. But, you know, as you kind of look at this, it's not just a dollar story, but the point being that with 2 weeks, it's had ample opportunity to basically price in that expectation for rate hikes and for, you know, even more in the future and such. So that's kind of the initial takeaway, is part of the thesis of this being priced in. Well, that's what we're basing some of that off of, is that came out 2 weeks ago. Now, if we look at the actual announcement, it did just as expected. See the forecast at 3.35, see the actual at 3.35. So should this be a huge shock to the market? No, it's a known unknown. Should the unknown part of it, so we knew it was coming out, and then there was these unknowns, but should this be something of a major surprise? Probably not. The unknown became known. There was a reaction to the upside, but this would be a circumstance where it could easily fade. You could fade that move in that it was largely priced in already ahead of time. Again, all part of kind of the thesis, and then we had the technical setup to back it up on the hourly chart. So that's trading in a nutshell. We had some ideas that mirrored, you know, kind of the thesis, the fundamentals, the market sentiment, that mirrored and worked well with, I guess married is a better idea, that married together well with the technical setup. And when you get those factors and the puzzle pieces coming together, it paints a nice picture and a nice opportunity. So coming back to just review before we wrap up, we are up about 10 pips, you know, not anything too major, but we're up about 10 pips so far. And I would expect that to continue to build as this drifts lower here in the coming hours ahead. When will it get to the lower end of the range? It would be more likely to happen tomorrow. Could happen in the middle of the night, but that would be more of a tomorrow story. If we're right about this and it continues to fade off, expect that to get towards the lower Bollinger Band, you know, tomorrow morning, something along those lines in a few hours. On behalf of Maverick Currencies, I'm Corey Halliday. We'll see you next time. Goodbye, everyone.